Hello and welcome to the Weekend Investing Daily Bites. We are shooting this episode on 21st of June, and another day where the market tried to make a new high. It actually closed at a new high, but failed to really make a very large move as one would expect, crossing the previous high. So we are in that very crucial zone where the market is trying to make a new high, break out of this resistance, but not able to. Last four sessions, we have, in fact, five sessions, we have been in this 18,650 to 18,850 zone. And you can see here, if you can just zoom in, is that one day up, one day down, another day up, another day down. That has been the movement so far, but we are very comfortably placed in terms of the new close at 18,856. That is a all-time high close for the Nifty. I mean, it is important to realize that we are sitting at a all-time high, and if you will see, go back and see the last couple of decades of history, you will find that whenever the market makes an all-time high, the probability that the market will continue to rise for a considerable period of time is high. So very rarely will it happen that market comes to all-time highs and makes a double top and goes down. It does not happen so frequently. But what happens more frequently is that the market makes a new high and continues further, and that is the whole concept of momentum investing actually. Looking into the Nifty heat map, we can see that we had some green on the screen. HDFC Bank and HDFC Twins doing very, very well today. In fact, large part of the gain could be attributed to these two stocks. They are about to be merged, and all the worries that people had to shelf their or reduce their exposure to this group because they will have a double exposure once they merge have been, I think, those worries are gone, and buying has resumed in these counters. Power Grid is another stock that did really well at 3.8%. ONGC doing very well at 1.8%. Adani Ports also doing well at 1.5%. And the other parts of the market were muted. Steel, cement, autos, pretty much muted. Big cut on ITC, 1.28%. Not so big actually, but still, given the recent past, 1.28% is kind of stiff. Divi's Lab down 1.6%, Mahindra down 1.6%. IT stocks pretty much flat, and consumption stocks also flat. Within the sectors, if we see that the metals have lost the most ground today at minus 0.9%. Energy stocks up at 0.8%. Public sector enterprise stocks up at 0.7%. Within public sector enterprise, railway stocks that were hit, RVNL especially, that was hit on news that some contracts were getting cancelled, has denied that, and in fact more orders have come in the last 2 days. So that stock also doing all right. Infra stocks have gone up 0.5%. PSU banks continue their run. So PSU banks, if you see, in the last month are up 3.5%, whereas private banks in the last month are up 0.3% only. So within the banking space also, there has been a bit of a divergence where private banks have been catching their breath while PSU banks have been running forth. Nifty up 0.2%, Bank Nifty up 0.2%. Not an exceptional day, but still, I would say, reasonably sound small steps towards all-time high, and then we may get a complete breakout gap or breakout rally in the next few days. That is possible. FMCG stocks down 0.4%. Real estate also down 0.3%. Consumption and autos also are down 3%. Mid-cap index, huge gap today. Some of the mid-caps are running very hard. Shriram, Piramal, all these stocks doing very well. And mid-cap index closing at 35,614. So mid-caps actually have led the entire spectrum of the stocks, faster than small caps, faster than, of course, large caps, and mid-caps have stolen the rally here. Small caps also doing well, hitting 10,600, but giving up some of the gains for the day, closing just above yesterday's close at 10,531. So this rally has been spectacular since end of March. If we get a 5-7% cut anytime, don't be surprised. That is how any rally would sustain its semblance and regather and start again. But I think before Nifty really makes a decision whether it wants to break out and go up, or it wants to make a double top and sort of hang around for some more time before it does that, I think small caps will also do the same. I don't think there'll be too much divergence between large and small caps on that front. Now, this is a very important year going into election year. We are maybe 9 odd months away from elections, 9 or 10 months. So very soon, within a few months, there will be focus towards the election year and how the winds are blowing for the current disposition, and those will also be taking upfront role in terms of how markets are doing, how FIIs are bringing in money or taking out money, so on and so forth. Nifty banking is stuck in that box, as we mentioned yesterday. It bounced off very strongly from the bottom of the support. Today it closed slightly above yesterday's close and was up. Stock of the day is this Linde India. The stock has gone up from 500 rupees, or rather 400 rupees at the bottom of COVID, to 4582 today. So more than 11x gains in the last 3 odd years. And what we need to sort of, see from this chart, and I've specifically, tried to channelize these movements, is that for the 14 years from 2007 till 2020-21, stock went up from averagely somewhere around 200 rupees odd. It was trading in 2007-8 to about 700, 750. So about 3x, 4x in last 14 years, which is all right, which is good, so on and so forth. But the trajectory change that happened from 2020, going from 500 to or 400 to 4582 in 3 years, 11x in 3 years, that is a huge trajectory change. And what happens usually is that one if one were invested here and enjoying the gains what were coming, this move here, large move, you know sort of becomes like a move that is which is very difficult to digest, very difficult to accept, that a stock can grow from 1,000 to 1,500 in 1 month, maybe because there was no apparent reason for it to do so. And then it just kept building on that gain, from 1,500 to 2,000, a little bit of setback, then 2,000 to 3,000, then a correction, then 3,000 to 4,000, then a correction, and then 4,000 to nearly 4,500 now. So the momentum has been on. Of course, it has had its own few months of downside also, but any good momentum strategy would not let a stock like this go easily. If it is satisfying the volume criteria, if it is satisfying the market cap criteria, whatever that criteria may be, only momentum strategies will be able to get a handle of this. Because otherwise, because it is running so far ahead of value, perhaps, or the clarity is not there why it is running, it's very difficult to buy such stocks when your exit is not defined. Here, maybe the open offers of taking it, of delisting the stock also maybe doing the round. So all that, it plays a part. But what I'm trying to say is that the psychology of how you buy a stock and hold it can be very, very different when your entry and exit rules, versus you are trying to guess what should be the value, or where should I be buying it, or once it has gone up beyond what I think should be value, where should I be selling it. So there is a lot of ifs and buts in conventional investing, but with momentum you don't have to worry about that. So these are the lessons from the stock of the day. Thank you so much for your time, and we'll wait for any more questions. You can ask me about anything you like. I'll try to bring up my charts and answer that question. So I'll wait for a couple of minutes if you have any questions on this day. While I wait for the questions, let me also let you know that we have uh, a website at weekendinvesting.com, and there's a lot of tools available there to study, the past movements of various indices, various products that we have there. So go through that. There's a lot of data about momentum investing. There's a free course about momentum investing if you want to learn that. So just go to the weekendinvesting.com site and you'll find all those links there if you're interested in momentum investing. Momentum investing, if you have not heard about it, you must learn how it is, how to do it, why it is important, how it can add more alpha to your portfolio, how it can, give you a great additional sort of nudged to your returns if you have been sitting only with maybe value based systems or a conventional investing system. This can really add that extra mile on your portfolio if you follow that. So I don't think I have any questions. Yeah, but there's one more question is, what is the main metrics for you to entering or exiting a stock? Mr. Amit Khanna has a question. So what I will do is I will request you to go to our website and download that course. We have explained it very nicely there. We've given a complete strategy in that. But to highlight what is a entry and exit is that just like conventional or value investing, fundamental investing, there's no one way of doing momentum investing. So momentum investing can be divided into two parts. One is like absolute momentum. One is called rotational momentum. I'll share videos on absolute versus rotational momentum if you like. The idea being that you need to identify stocks with high momentum, and that becomes your entry criteria. And you rank stocks and you allow new stocks with higher momentum to come into your portfolio, and you get rid of stocks that have reduced their rankings or are falling in momentum to get out of your portfolio. To give you a very simple example, for instance, you buy stocks which have hit a 52 weeks high, and you may sell stocks which have gone, let's say, 20% below their all-time highs, or maybe they have breached a 20-week moving average, or they have gone below a RSI of 60. Any exit criteria can be used, or a multiple of exit criteria can be used. The whole idea is that you be able to rank uh, uh, stocks in a way where you can compare one to the other, or to an absolute number, and that's how you will have a quantifiable way of how to enter and how to exit without any confusion. There's another question. What are your views on SBI? So let me just open up the SBI chart for you, and let me see if I can just get this here. So I hope you can see my chart. So this is a weekly chart of State Bank of India. And what we can see here that, after making this stop here at 620, it is sort of gone sideways in this move here. After having broken out here, it has gone sideways. So I would wait for, the up move to be confirmed above 600 if I'm sitting out of it. If you are already sitting long in it, and I don't know what risk management you would have done with your existing position, but anywhere below 500 would be a, get out of this stock for me. From that perspective, immediately for 1 or 2 weeks, it's difficult for me to say on a short-term basis how the stock would do. But it does look, a bit sort of, I would say, oversold in the last few weeks. You can see RSI is very near 40. So from that perspective, it's already oversold. It is ready for a bounce, but I think you could, for a very short period, you could use this 562 as a stop if you are willing to sort of not take a small loss on it. But if for a medium term, you could keep your stops somewhere around 500. That would be my guess on this. Sun Pharma is another question from Mr. Samir. Let me just pull up Sun Pharma stock. So Sun Pharma again sort of is after making a top here, has been making lower highs. I think you can await breakout of this 11015 level, and if this breaks out, I think you also will get a very nice head and shoulders pattern. If the stock manages to break out of 1020, and you could expect 1,000 point rally there. So I think that is something that one could look out for. Below 980, I would get cautious here because that is sort of the right shoulder bottom that was made, and below that, ideally, it should not go here. So these are the two sort of important points to watch from a technical point of view on Sun Pharma. So okay, I'm already out of my time. Thank you so much for watching this, and I will see you in the next episode. Bye bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.